Did you know CPAs work around the clock on taxes, audits? Yes, it's quite a shock. But business owners, they've got a dream. More tax saving strategies, that's what they need. Welcome to Proactive Tax Strategies. And we're here to take away high tax fears. We got secrets, magic in our hands. Tune in as we travel.
This is part 2 of a discussion between your host Ken New and Ian Welham. In part 1, Ken and Ian focused on how CPAs can maximize their profit potential. This time around, they addressed the issues of how accounting professionals can become more relevant and how to add value. Ken, over to you.
Hi, everyone. Welcome to the broadcast today. I am Ken New, and my company is Pinnacle Financial Wealth Management. So for over 2 decades, I have been specializing in advising high net worth individuals and business owners. My guest today is Ian Welham, a chartered accountant specializing in helping CPAs and accounting firms maximize their profits and create more value for their clients. Now, a little bit about last week. We talked about the current challenges for the 21st century firm. So a few of the points: we explored the thinking. Like any business, accounting firms and CPA firms want more clients. Yet, Ian, you pointed out the challenge is having too many of the wrong types of clients. In addition, we referenced to an analogy from the medical profession, and that the focus on prevention over treatment, or prescribing a cure rather than just treating the symptoms. So here's the thing. Many high net worth individuals are planning to sell something of high value. It's a business, a highly appreciated property, large stock positions. So these types of sales generally create a significant capital gains tax liability. This should be planned for. Unfortunately, many tax professionals and financial advisors fail to help clients look far enough into the future and put a plan in place. So here's the challenge: how to transition a tax practice of preparation and basic tax strategy to a proactive practice of advanced tax strategy and financial planning. And you know, I love this phrase: if you change the way you see things, the things you see will change. Ian, how can we help tax professionals add more value to these client relationships?
Well, Ken, in short, I might say by partnering with a team-based advisor like yourself. I mean, sincerely, working together with an advisor that's using a tried and trusted system within the team-based model, then you're able to deliver many more solutions to meet the client's precise needs than if the accountant and you were not collaborating. I'd like to maybe change track a little bit here and sort of give you a before and after view of a CPA or an accountant, where the practice was highly based on tax preparation with some basic tax planning. And by the way, this is the way a lot of CPAs and accountants focus their time. The unfortunate part about that is the client may still be paying a lot of tax. And in reality, the CPA doesn't know what the client really needs outside of the numbers that the client provides to him or her. And in fact, of course, that's used to prepare the tax return. And of course, if there is some tax planning, do some basic tax planning. But they're not really digging deeper. And therefore, they're not really helping the client in all the ways that they could. Let's look at the other side of the coin, another model where the CPA firm has widened the focus. They're working collaboratively using more tools and, as I said before, a process which can be relied upon, where they can save the client taxes and possibly more taxes, but also help with other needs that the client may have. And how do we go about that? Well, what they do is they use a diagnostic and process tools to identify that this client, for instance, is, let's just imagine, is a business owner, and that it's a successful business owner. And they have a business partner, the client's married, has kids, the kids haven't gone to college yet. Let's say the couple's about to receive an inheritance, right? And they've acquired for the first time a commercial building. If you think about that, there's a lot going on with that family, but that's not unusual. There's lots going on with lots of families. In the past, the CPA would have just done the taxes with some basic tax planning, but wouldn't necessarily have identified all of those other details. So the team-based model diagnostic process also discovers all of those things and a lot more. For instance, those business partners don't have a buy-sell agreement in place. So if one of the owners dies, his or her spouse, who knows nothing about the business, becomes the new business partner. So clearly we need to prepare a buy-sell agreement, and we need to fund it. And that funding typically comes, by the way, with life insurance policy. But the point being that discussion would never have taken place if there wasn't the process and the diagnostic. Let me draw your attention back to the fact that they've just bought a new commercial building. Now that they own that building, we could recommend that they also do a cost segregation study, which could be done efficiently and could identify a number of tax savings. One of the most common things that I find that families don't have, they don't have a complete estate plan in place. Some of them don't even have a simple will or a power of attorney. So let's imagine now that this particular client also, they have a will, but they don't have powers of attorney, no trust, and other things. So again, this is an area of protection. They may be doing well in their business. Everything might be looking great, but you need to plan for the future. Be proactive rather than reactive. Rather than have a problem occur, let's prevent it. So we need to establish an estate plan that provides living benefits and benefits to the children or their other beneficiaries when the parents pass. If you think about the last few minutes of my conversation here, how much more value have we added to the client's life by acting in this proactive way? Now, that's the difference between a CPA working within our team and having the benefits to pass on to the clients. Those actually transform people's lives. And it takes them from being a basic accounting firm to becoming a 21st century accountant with a much wider focus and a holistic process, which overall, and this is always at top of mind, bringing huge benefits to the client.
Yeah, absolutely huge benefits. You know, the magic there is getting to know the client. And that's a collaboration between the financial advisors. I mean, we're always tasked with getting to know our clients on a very deep level, to get to know their beneficiaries, get to know all the details about them, what they enjoy, their important anniversaries, and many of those kinds of things. And That's really what these processes are created to do. It's the diagnostics, it's the conversation with the client and getting to understand what is most important to them and using the team-based model. And that whole process in not only understanding their needs, but then being able to prioritize those needs. Because very often we can get very deep and find that there's many different areas: estate planning, tax planning, the financial planning really for income or growth. And then, as you brought up, the legal matters, having the durable power of attorneys coordinated along with some of the other legal documents. So here's the thing. If you change the way you see things, the things you see will change. And it's a different vantage point or perspective to develop a new narrative from what really I call the conversation that many tax professionals have, which is, how much do I owe in taxes this year, to how much did I save? I saved such a large amount of taxes by implementing this strategy. So here's the thing. With all these benefits, why don't more accountants and CPA firms adopt this forward-looking position?
Ken, in my experience, and I really believe that being an accountant myself, I do have a little bit of an accountant mindset. But in my experience, there are three major reasons for not adopting that forward-looking position. The first one is they're in their comfort zone. They're working, they have bills to pay, and they're accomplishing that. So what happens is they keep taking on more clients, and they're on the treadmill, and that treadmill's going faster and faster, and they're running and faster. And it's actually a vicious cycle. But it's driven by the fact that that's the way we've always done things. And I suppose you could think of it like the hamster in the hamster wheel. They don't know how to get out once they get going. The second thing is they don't know how to change. They haven't been taught how to change. Their business model was ingrained in them years ago. Even making a small change will take a tremendous amount of effort. And as I say, they don't know how. And thirdly, they don't know who can help them. They don't have the answers to that. They don't know where to go. Even though the AICPA regularly puts out bulletins and information in a way to try to encourage them to do that, the problem is who? Because they don't have the in-house expertise. Now, overall, if I take an overview of a practice, the firm still needs to continue bringing the cash. And they know they need to make this transition, but they don't really have anybody, as I said before, internally to turn to. If they start working with a proactive consultant with a team of experts, then in fact, all of these problems could be solved. In essence, by using the team-based model and working closely in collaboration with a qualified advisor like yourself, we actually have a way for them to continue to take in revenue from their current clients, but we also offer a way for them to move into this proactive process without stopping the cash flow. In other words, the bills will still be paid. Now, our process is completely turnkey. And of course, as you know, offers coaches to help to make sure that they take the right steps. And they've got you partnered with them to help implement the changes. They're not on their own. Those three things combined make it much easier for them to become that accountant of the future. As we say, 21st century advisors, not just accountants.
Yeah, that's a great recap. And a nice consolidated way to describe, I think, to a tax professional in today's world what it is that the next steps are. So if you could just wrap that up one more time and just bullet point action steps. I know we've talked about working collaboratively. And so again, let's repeat that as a wrap up.
Sure. So as a final few thoughts here, let's start with the fundamentals that everything that we do should be in the best interests of the client.
Absolutely.
And I know, having spoken to literally thousands of accountants, that they believe that they do exactly that. It's just that there are a lot more things that they could be doing to make themselves not only the most trusted advisor, which they are, but also the most relevant advisor. So again, the steps to do that are not to stop the income, the cash flow that you're currently receiving as an accountant, but actually to work collaboratively with a team-based model consultant like yourself, who can walk them through this turnkey process and make that transition seamless and effectively add to their revenues almost from day one. I'd say within 60 days, they can start to see increases in their revenue. So for those accountants listening to the podcast right now, and you want to do more for your clients, don't sit on the fence, get some help. Just reach out to the team after this podcast, and they'll be happy to guide you. It's the first step in becoming what you want to be, which is that 21st century advisor, not relying on tax season anymore for most of your revenue.
Well said, Ian. Appreciate that. You know what I think the magic is here is in that process, the diagnostics, the process that we take the clients through that help to uncover what's important to them and what the priorities are, then to be able to focus on those collaboratively as tax professionals and financial professionals. Here's the thing. The future is faster than we think. It's rushing right by us. And as financial advisors and tax professionals, we're destined to work together to be able to work in the best interest of our clients so they can achieve their financial dreams. And very often that means reducing taxes. So thank you for the broadcast today. Great job. Appreciate your time today, Ian. Any other final thoughts?
Thank you, Ken. Thank you for the opportunity to talk on this podcast. I'd encourage everybody who listens to this to hear the last words you said. The future is rushing towards us. It's accelerating. And before we know it, all sorts of changes will have happened. So don't get left behind. That's what I say. Don't be left behind.
Thank you for that, Ian. Appreciate that. I'm certain everyone will have Ian Welham back to speak to us again. Our next broadcast next week is going to be a case study. We're going to get into some tax strategies, some good year-end tax strategies, talking about accelerated bonus depreciation using cost segregation. And our speaker will be Alan Hardy. He's an attorney and financial advisor from Nashville, Tennessee. So come back, listen to that one. This broadcast will be available as the first broadcast in our series is available on our website, Pinnacle Financial Wealth Management. spelled mgmt.com. Thank you, everyone, for listening. See you next week.
And before you go, Ken, how can people reach you?
Yeah, so our number at Pinnacle Financial is 321-454-3623.
Fantastic. Thank you for that thoughtful, insightful discussion, gentlemen. Accounting professionals out there should easily embrace this because knowledge can be found in the team, and don't be afraid of knowledge. Thank you all for joining us on Proactive Tax Strategies. Please follow or subscribe to this podcast to make sure you get the latest show, and be sure to share with colleagues and friends interested in advanced financial strategies.
Thank you for listening to the Proactive Tax Strategies podcast. Click the follow button to be notified when new episodes become available. Visit our website at www.pinnaclefinancialwealthmanagement.com or give us a call at 321-454-3623. Investment advisory services offered through Arlete Wealth Management, AWA, an SEC-registered investment advisor. Pinnacle Financial Wealth Management, AWA, and AWM are independent entities. Discussions are meant to be general in nature and may not be suitable for all investors. Please consult a tax professional regarding any tax implications.